Hi guys, welcome back. Today we'll be looking at SoFi Technologies. I believe this is a very promising company with an amazing growth story, especially in the financial technology field. And I believe it has the potential of being a market-changing company. So today we'll be doing a stock analysis on this company. This company came onto the public market in early June, and since then the stock is down about 20%. So once again, as I mentioned, we'll be doing a stock analysis on this company. As always, if you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So what exactly does SoFi Technologies do? So SoFi operates a financial technology platform that generates revenue from three core segments: lending, on top of that, it has a financial technology and banking as a service platform they call Galileo, and financial services as well. The product portfolio covers a wide range of services, including personal, student, home loans, stock and crypto investing, credit card issuing with a direct cashback, money management, as well as the financial technology or banking as a service through Galileo's technology platform. So the market they're addressing is a whole banking service. Many customers in the US right now, which is their target market, use more than one bank. And SoFi is trying to make all of the services that traditionally require multiple banks to all be compressed into one very efficient platform. And so far, they've been delivering that to a very good standard as well. So the breadth of SoFi's offering is really impressive, and it leaves competition far behind. There is no other offering that combines all of these services in a standalone app. So they kind of created a super app for everything that's financially related, and it offers a full suite of financial products as well. This is a compelling argument by which SoFi should be able to pull a large share of customers from legacy banks, from which the top 10 hold about 50% of the consumer's $500 million worth of bank accounts in the United States, which is a pretty large pie up for grab, especially if you consider that 50% of Americans use one or more banks, use more than one banks to fulfill their needs due to a lack of integrated financial one-stop shop on a digital platform. So this is the market that SoFi is addressing. I believe it's very promising looking into the future. So we'll be looking at their investor presentation. We can see here that their member growth is accelerating. So if you look, they're on track to exceed 3 million members in 2021, which is up 75%. After 6 consecutive quarters accelerating of year-over-year growth. See, from quarter third of 2019, it had 37% growth, 50% growth, 54%, 59%, 74%, and now 75% growth moving into the financial year of 2021, which is amazing growth over the last 6 quarters. They're nearly doubling their multi-product members to 775,000. They have a total products rising from about 2.3 million to 4 million, which is about a 77% year-over-year growth, and their multi-product members from about 400,000 to 775,000, which is a 95% year-over-year growth. On top of this, we'll be looking onto their home loans. So 65% of home loans come from an existing member's driving, which is about 30 million in quarter 3 of 2020 revenue. Quarter 3 of 2020 revenue on about 1 million in acquisition marketing there. So that was a very good investment from them. If you look at the home loans cross-buying momentum that helped drive the $30 million in revenue on just $1 million of marketing. They had the net revenue per funded loan, which was up 5,000. Their variable operations cost per funded loan, which was up 8,000. Their acquisition cost per funded loan was up 5,000. And then their variable profit or loss per funded loan was up 19,000 there as well. So if we go down, we can see... they've seen 6 quarters of accelerating growth in total accounts. Year-over-year growth was 8%, 23%, 30%, 62%, 75%, 83%, and now 131% in quarter 3 of 2020 in terms of the number of accounts they have. On top of this, as I was mentioning previously, they were creating some sort of super app for all the financial services they need. So SoFi and Galileo are better together. It accelerates their strategy while also helps expand Galileo's products and services to the 50 million accounts on its partners as well. It drives faster innovation to fuel SoFi's direct deposit relationship. It offers SoFi loans, brokerage, lantern marketplace, and new technology services to the 50 million accounts via Galileo partners. It is the product roadmap for new tech services and geographic expansion into Latin America and Mexico, which provides additional growth opportunities for SoFi as well. And it has a rapid customer and revenue growth fueled by the acceleration in financial technology, high margin technology revenue stream, and increased diversification as well. So you can see SoFi and Galileo are a very good team as of right now. So let's look at the financials next. We see they've been accelerating their revenue growth in 2021. And if you look over the last few years, we can see they had year-over-year growth of 87%, 38, 58, 53, 40, 33, and 31% adjusted net revenue over the between 2018 and 2025. So currently we have about 58% growth from 2020 to 2021. And by 2025, we can see exponential growth occurring there as well. Again, if you look at their adjusted earnings before interest and tax, etc., in $1 million, in 2021 they broke even with 27 million. But looking at 2025, they're looking at more than $1 billion in revenue there. So once again, a very good revenue growth looking into the future as well. So the next thing we'll be looking at is the main three business segments. You might have seen this image in the previous slide. So they have the lending services, they have Galileo, which is their technology platform, and they have their financial services as well. So they have their financial services, which is growing at about 153% compound annual growth rate between 2020 and 2025, which is on its way to profitability. Their Galileo, which has a 55% compound annual growth rate with a 62% margin. And they have their lending, which is a 25% compound annual growth rate and a 58% margin. So we can see between 2020 and 2025, this company is looking to grow exponentially, especially their financial services and technology platform. And lending, although it may seem small in this regard, a 25% compound annual growth rate is something to die for, especially in a growth company such as this. If you look at their diversified revenue streams, the majority of their revenue is coming from their lending platform. Then the next highest will be their Galileo tech platform, and just a small percentage, just 2% from their financial services. But looking into the future, 2025, they're looking to be more diverse. About 43% or 1.6 billion from their lending platform, about 25%, close to $1 billion from its tech platform Galileo, and about 32% or 1.2 billion from its financial services. So by 2025, they're looking at about $3.7 billion in adjusted net revenue. Once again, amazing growth, especially if the company, looking at this company, wasn't even profitable last year. So if you look at their growth at scale, they have an adjusted net revenue of 43% revenue compound annual growth rate and more than 30% adjusted earnings before interest, tax, etc. So what is the company's future growth into the future? So if you look at their current financial platform, they have a year-over-year increase in revenue of 151% to 216 million, which beat their management's guidance by about 15% on the higher end. Their lending segment generated close to $170 million in revenue and accounted for more than 76% of their total revenue in Q1 for 2021, which was up 106% year over year. The technology platform, or Galileo, generated about $46 million in revenue. This is majoritively including Galileo, which had a growth rate of more than 45 times compared to just $1 million in revenue a year over year, 1 year ago. And the revenue from this segment accounted for 21% of the total revenue. The financial services segment grew revenues by 200% to $6.5 million as well. They also reported very strong customer growth. This is the 7th consecutive quarter of year-over-year growth acceleration in the number of customers they have. Looking at 2018, they had about 240 million, but now they're looking at close to 751 million in net revenue right now. They also doubled down on strengthening their technology platform by acquiring their fintech platform Galileo. Galileo is one of the largest digital services in the banking market in North America. It serves about 70% of the top 100 fintech companies globally, and it's expected to be one of the biggest drivers in revenue for SoFi in the long term. The platform saw a third quarter in a row of 100% year-over-year customer growth, which is very, very impressive. And they are also penetrating the business-to-business revenue stream through its customer-facing offerings as well. The combination will likely also accelerate and expand SoFi's existing platforms to the 70 million accounts that Galileo is already linked to, which is a very good cross-selling opportunity, expanding out with Galileo and then selling your services slowly on after that as well. So if we look onto the technical analysis for SoFi, we can see the stock hasn't been around long, but after its merger in June, the stock is down a solid 20%, coming down to about $18.50 at its lowest. Right now, the stock is trading at a pretty cheap price at about $20. And if you do choose to invest, as I believe it has a very good growth opportunity, I would suggest buying long puts. It doesn't require too much capital upfront, and your return on investment could be very, very high. I believe it has a very promising growth story into the future. We can see the company itself is already growing very, very fast, and we're looking at a close to a 45% compound annual growth rate of revenue itself from 2020 to 2025, and it's going to be $1 billion company in the next few years. So if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.